Good evening, everybody. We're going to get going very shortly. Thank you for your patience. Okay, good evening, everybody. Welcome to this evening's ACY Securities webinar, Live Forex Market Review. My name is Duncan Cooper. Thanks very much for attending. If you're on a YouTube channel, I can't see the chat, but you're more than welcome to watch. If you want to be able to ask questions, please just register and attend the webinar. I'm giving you the link. All right, let's get into it. Please read through the risk disclaimer before moving along. Questions to the chat or the question and answer box. I've got both open. All right, so just read through the risk disclaimer. I'm going to be providing live analysis. If you want to take a trade, that's your own personal trading decision. Everybody's responsible for their own actions. All right, if you don't know me, I think everybody knows me. Just looking at the list of people. My name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time trader. I've been trading for more than 15 years now in the Forex market, mentoring clients for more than 10. If you want to contact me about the webinars, just send me an email to duncan.cooper@acy.com. Through the week, you can connect with me on our website, acy.com, Market News, ACY Securities Australia YouTube channel, and you can connect with me personally if you want to on Twitter and LinkedIn. As well, in our Telegram channel, through the week, I'm providing analysis in there. Contact Nathan Bray if you want to get access. I'll give you his details in a moment. If you want access to my chart layouts, indicators, so on and so forth for the MT4 platform, just contact Nathan. So I'll put his details in the chat for you. If you've got any questions about opening an account or questions about your account, if you've already got one open, just contact Nathan. He'll be able to help you out. All right, that's in the chat. Just email him or give him a call. He'll get back to you. All right, so first up, just want a quick look at the news coming out. There's a risk event coming over the next almost 24 hours. Fractionally longer than 24 hours, but the US job figures coming out tomorrow at 10:30 p.m. So market might be a little bit range bound or not. Tends to get range bound a little bit ahead of the event. So we do today have some Canada news. Well, we've got minor US news, unemployment claims 10:30 p.m. Canada IV PMI coming out at midnight, 1:35. We've got the Canada Bank of Canada governor talking. Speeches from some of the members of the FMC early in the morning Friday. And as I was saying, the bigger event is, well, I've got Canadian job figures, but the US job figures coming out at 10:30 p.m. So we did have some positive news yesterday from it was the US, the ISM Services PMI. So that's the one to watch for the week. So pairs may be a little bit flat ahead of that. It's always difficult to, if you're not in a position that you're well in profit ahead of the job figures, it's always difficult to hold a position ahead of that because price could go any which way. What I like to do is have my levels that I'm watching where price could move to once the news release gets released, and then afterwards I can start to decide as to whether I want to engage at my levels. All right, so I'll go through the levels I'm watching today. So I just want to click through these 15-minute charts and just see what is going on. There's a little bit of a, I'm just pausing because there's a question coming in. Cameron is saying it's bizarre because they say it's greater than the forecast, it's good for the dollar, yet the dollar tanks. Well, it went down a bit, but it did rally back up again. So you're talking about the US news last night. Well, the Aussie, for example, did go down, but it was around about here where it went down, and I was short from 65 and woke up at break even. So some pairs, they didn't really follow through to the downside. You're quite right, but you know, we are heading back down now. So it all depends where price is, generally speaking. The news was US positive. We did trade down a little bit more, but then where's price in terms of its price points and levels? So, all right. Just want to click through my 15 minutes. Posted some levels on the pound dollar and the euro dollar and Telegram today. They haven't been reached, but those pairs have had a little bit of a sell-off. All right, we'll have a quick look at the dollar index and I'll get into the pairs. Now, this is the day chart look. We're having this retracement here, which is really a weekly retracement. This is the weekly chart. High tops and bottoms. We pull back to the 62% level. So have we had a corrective measure on the weekly structure there just to continue up with the trend? Not seeing anything that would tell me otherwise. Just starting to maybe want to head back above this level of monthly resistance, 111.31. So structure-wise at the moment, as we head into the higher time frames of weekly chart, can't break the trend on the dollar index. So pairs to the US dollar should, if that keeps moving up, they should, you know, continue moving down. S&P 500 has been having an outside week, up. All right. This is just a short-term correction, or we're going to get a longer-term correction. All right. So we're been having a correction down on the dollar index, correction up on the S&P 500. So that kind of correlation is all correlated at the moment. But the question is a short-term correction? Looks like on the US dollar, short-term correction. On the S&P 500, it is at much more of a significant level here of monthly supports that it's false breaking, moving back up to the upside. So this could be putting in a much longer term bottom here. We'll just have to monitor. All right. All right. Now, some of these pairs aren't exactly all correlate together. What I'm seeing is that the euro dollar and the pound dollar potentially are topping out. But the likes of the New Zealand dollar and the Aussie dollar potentially might be in some form of an uptrend still. And their associated yen crosses are moving up in the same kind of vein. So Let's just look at the Aussie pairs first of all. So if you look at the daily chart, this is forming two higher bottoms this week, one here and another one there. Now, the monthly look, I'm just looking for potentially some kind of retracement back up inside last month's very negative candle. All right, the daily is up at the moment. Now, it's struggling up here, this daily resistance level. It's gotten close to it this week, 94.75. All right. And you can see this is the higher bottom of the day chart here, one, next one, two. And draw a fib in across the day range. We pull back to the 79% level. There's a day support level here at 93.06. And we're putting in this movement up here. Had a heavy sell-off in the last 4 hours, but we may well be moving up this leg up here. It's challenged 94.75. And, you know, in the short term, we're moving up the range. I'm monitoring the whole monthly candle, which is from high to low. And with a very negative month last month, you know, let me get rid of that fib because it's overlapping. You know, looking at the 62 level up here, or the 79 level for later in the month. At the moment, well, it might not get up to those levels. At the moment, it is very choppy, but it's just holding to, back to the daily, you know, a high bottom forming today, further high bottom formed already. So there's a little bit of an up cycle to it. We've been selling down through Asia into London, but overall, over this range from yesterday's low up to today's high, you know, we could see support here coming in at the central pivot point. We could see a 62% pullback. There's just a structural look of an uptrend there at the moment. All right, whether or not you want to engage in it, depending on how you're looking for the longer term picture through the month. At the moment, you can see we're getting support there at the central pivot point. So you could look for a setup here for a move back up. We could well be seeing a move back up there. Same on the Aussie, on the 15 here. Same sort of range from yesterday's low to today's high. Maybe we're pulling back to the 62 level to move back up today. We're just underneath the central pivot point at the moment. So this is the same as the Aussie Yen. It's structurally forming some form of higher bottom here. Another higher bottom here. MACD's crossing up. Bigger picture trend is down. Lower tops and bottoms on the weekly. I just think maybe we're going to come back up to this area here. You know, yesterday's webinar, we were looking at the failures of structure last month. This is a clear level where we could rally back to during the early part of the month for failure to move down long-term with the trend. All right, so I'm not that fussed about trying to trade up against the bigger picture trend. So I'm just waiting for an opportunity to maybe try to structure a sell. I've already tried selling it once at 65 and ended up with a break-even trade. But it just has that picture at the moment on the daily that's got some form of little uptrend moving up there. So, of course, if price can get up to the level that I'm watching up here at 66.71, monthly resistance and weekly resistance, I'm looking at this area for failure if we can get up there to trade back down. Of course, to get there, it has to trade up. So, of course, you could look to engage to the upside. I think at the moment, if you wanted to look to engage to the upside, you need to start to see price wanting to get support at central pivot point. So it could have a deeper pullback to the 62, to 79. You can watch and monitor to see if it gives you a setup to think, okay, we're getting support for a move up. There's no trend line break there at the moment. Nothing is quite yet telling me that it's getting ready to move back up intraday, but structurally, it's got that undertone of a bid, both the Aussie and the Aussie Yen. Euro Yen, All right, so we discussed this, touched base on this a little bit, this area up here yesterday. Possibly a double top here with these two tops. Breaking the low of yesterday would start to confirm that. I'd be a lot happier to try to get in on a, can price come up and retest up here at 144.03 or even 144.20 for this area up here at the top. Price may have already topped out up there. Leaf May, you're asking me, is it okay if I draw a fib retracement tool in the 15-minute for previous day's range? Well, you can draw it whichever way works for you. I was using it there on the 15-minute chart, but I was basing it across. Whilst I was drawing on the 15-minute chart, I was really picking the low of yesterday up to the high of today, which is the 4-hour chart range. But I know that in my head, so I'm just drawing over the 15-minute chart so I can line it up to see what overlaps on the 15-minute chart with the pivots. So if I move back to the 15, that fib there at the moment is across that 4-hour range. All right, so I am drawing it across the 4-hour range. It's just that I've done it on the 15-minute chart. All right, in my head, I know it's the 4-hour range because I'm very familiar with what price is doing. So all I've done is I've just picked the 4-hour swing low to 4-hour swing high, but I've just drawn it on the 15. What I'm trying to see on the 15-minute chart is, does the fib overlap with any levels? It does overlap with the pivot here, does overlap with the pivot there. So, I'll be looking at those levels for potential support if pricing can get there, but we're not at those levels at the moment. So, but I'm not drawing it over a 15-minute range. There is a 4-hour range, okay? All right, on the Euro Yen. Euro Yen could have already topped out up here at 144 approximate level. However, when we get the news coming out tomorrow for the job figures, we could well, further spike up there. So I'm always more preferred to trade at the level or close to the level rather than further away from it. However, when we move down, we are maybe putting in a lower top now. Can I create a double top up here on the 4-hour? Maybe a lower top's forming here. And we're not going to move back up. You just need to decide yourself. Are we now forming a top? A lower top, I'll draw it from the highest point to that low. We have found resistance intraday today at the 62. We can see it all along here. So maybe we've already topped out. All right, we can't go back in time to the 62. It's already there. At the moment, for me, I'm just not trading the pair because I'm not in it. I would much prefer to see price come up to the 79 level up here, just because it's a higher level to look to construct to sell if it wants to hold there, or a further retest up here. Now, price might not give me those levels. Maybe price has already failed here. All right, I'd be much happy to trade up here because I can create a better risk reward. So when I'm looking to trade, then I'm looking at risk reward all the time. I'll get a better risk reward trading up at the 79% level or trading up here to trade back down than I will at the 62. So I'm picking the levels that I want to trade at. Whether or not price can get to my levels is another thing. All right, Cameron, you're saying support has become resistance on the 4-hour. Just here, there's a minor level just through there as well. Yep. So a little broken support there overlaps with that area through there. That's this low just there. So we've broken below that yesterday. It's become resistance here. So it may have already failed, but you can monitor it. This might just come back up to this area and hold. You can be looking now to trade obviously down from resistance on the 4-hour. I just like these high levels because they offer better risk reward opportunities. So that being said, look at price. What is it doing? Are you seeing a setup that you like to trade at a level that you like? I'd just be happier trading from higher up, but it might not give me that. we might see another revisit of the 62 level and fail to move back below that 4-hour resistance. All right, so you have to work out what level you're most comfortable at to trade. It may have failed at 62, not my preferred level, but that's where it's failing. Euro dollar, I got short this pair Tuesday, and but it may not have finished its rally back up at the moment. It may have topped up here, but we might see a bit more price cycle back up. It all depends. So on the daily, where I've got weekly resistance here, 99.52, I'm pretty much sold at that level. We have dropped down from that level, but we might come back up to retest that level. What I'm looking at as a bigger picture is that's the weekly top to the weekly low. And we're in the 62 area where we could be topping out to move down for the next move down, for the next leg down. All right. So I've already structured an entry. I'm already on board thinking that we're going to be moving down within that structure of the fib. Now, at the moment, the 4-hour chart, maybe it's already forming a lower top to further move below the low yesterday. Although this could come back up to retest. There was a nice structure area here, this nice consolidation. The base of the support has become resistance. Well, this was actually sitting along weekly support at 95.52. That weekly support's been broken. This base of support formed in this 4-hour area of support overlaps, and that's where we kind of failed 1 or 2 days ago. So we might come back up to retest 99.52. We could even move up to the 79% level if it really wants to. All right, but at the moment it looks like looking like 99.52 is starting to cap the market. We could come up for another test of that level. So if you're not in it and you want to get in it, that would certainly be a good level to watch for the next move down. Okay, you see here yesterday, see how we moved below it yesterday? It became resistance to move down. So we might get back up there. If you draw a fib from yesterday's high, I'm just using yesterday's high range to low. There's a 79% fib at 99.60, 99.52. I'd be watching that area. I posted that area earlier in the day. Where the price gets there, you just have to monitor. It could have simply topped out here at the central pivot point. Structure-wise on the 50-minute chart now, this is in the downtrend. It's just lower bottom, lower top, lower bottom. Is it going to put in a low? Is it going to now put in a lower top here at the 9900 level? 9904 is a long-term broken level of weekly supports. So that could be now acting as resistance upon small. All right. So 2 levels to look at, 9904. 9900 to 1904 could hold now for continued move down today. But yes, if some US dollar negativity comes out, we could pop all the way back up to 99.52. All right, pound yen. Slive, you told me you were in this yesterday. Don't know whether you're still holding, but we did get a nice outside reversal. And last month's candle range is that whole volatile price action. So we might be topping out here to clearly move all the way back down. All right. Dropping it down to a 4-hour chart. Maybe it's putting in a lower top already. Maybe it wants to have a little bit more of a retracement back up inside yesterday's candle. If it can, the 79% level of yesterday's candle is up there at 165.04 and 165. That would be a very good level to look for an opportunity to sell down. I can see over here, see how we had resistance there. Then the market, this is the bigger traders manipulate the market up to fill sell orders up here before it moves back down and creates a little small head and shoulder pattern there. So that little pattern that formed yesterday, the left and right shoulder, is all up there at 79 cents, 165 level. All right. Where the price can get up there, price may have already topped for the day and it's putting its lower top on the 4-hour chart and it's moving down. So you just have to work out, do you want to look to construct an entry if you want to get in lower down here, or do you want to try to see where the price can get up there today for a better level to sell at? Okay. Price may just come back to the central pivot point and 164 now for this area to be resistance. You can see a top here. You know, that could be a left shoulder. So then you look for the left shoulder opposite, and this is your head here. Okay. So I'd much prefer the higher level. I always prefer the higher level. So sometimes I'm waiting for a high level and it never comes. Maybe we have already put in the lower top. We're already moving down. All right, pound dollar. All right, so two levels I've been watching. 114.09 monthly resistance. That's broken support that we broke last month, becomes resistance. We've got daily resistance at 113.50, which we're below at the moment. And last month's range here, we're fair at the 79% level. So I was hoping maybe we could have another bit of a rally up to the 114.09 level. But again, lower tops are forming on all these pairs on the 4-hour chart. So maybe we've already had the move up and we're already heading down. On these 4-hour charts, they've all given you potentially a 4-hour candle entry. So maybe we're just moving down now, and you know, try to trade at a higher price might not come, but we might get a higher price tomorrow when the job figures come out. You never know what price might do. So on the 15, what I did, posted out earlier today, from the high yesterday to the lower yesterday, drawing a fib, I was looking at this area up here, 62 level up to the monthly resistance level. Could price get into that area today? Looking like it can't. Like all the pairs, they seemingly have maybe put in the 4-hour tops. All right. So maybe this might only come back now to 113.50 daily resistance. All right. I would prefer that area up there though. But you can monitor those levels, see whether you can construct a trade at a level that you're happy with. The pound dollar and the euro dollar there look like they may have, you know, be putting in the further lower tops on the weekly charts. I just go back, just have a look at the weekly chart on the pound here. There's a last month's high is a minor top on the weekly chart, so it's really the same thing as drawing across the whole candle of last month. Potentially a lower top's forming here. Well, it has formed there. This is a lower bottom. Are we putting in a further lower top at this monthly resistance, daily resistance to move down, like I was showing you on the euro dollar? All right. All right, so you can monitor those levels. New Zealand yen, not really focusing too much on this pair at the moment, but like the Aussie yen, we had a this is the monthly, very negative monthly candle last month. So we may just be retracing back inside last month's candle for a bit before having a month down. That's what I'm focusing on the Aussie yen. So it would be the same story on this pair. So last month's candles here, high to low. You know, can we get up to the 62? 79% rally would be awesome to get up to this level, because then you've got potential left shoulder, head, right shoulder. Now, whether or not it can get up there, look at all the candles. This is weekly resistance at 83.01. Whilst we're trading, we keep trading up on the Aussie dollar, on the Aussie yen, New Zealand yen, and the New Zealand dollar this week. We keep then falling back down. Now, the New Zealand yen here, you can see the wicks because we are trading above the level, but then we keep moving back below the level. There's no closing going on above 83. Yes, we're trading above, so the market's going up to fill orders, and then it's moving back down. All right, so whether or not we can get up to the 62.79, same on the Aussie yen, whether or not we can get up to those high levels or not, time will tell. What we're doing on the Aussie yen and New Zealand yen, both pairs are having a week up. We may only have 1 week up before then we have the next 3 or 4 weeks down. All right, so just sitting on my hands, I've discussed this before, negative divergence on the weekly. We could just be having a corrective rally this week. We might not get up as high as I'd like. And then we have 3 or 4 weeks down. We have a month down. All right, so, all right, there's the 15-minute look at the moment. Just want to drop back to down to the 4 hour. This is just still structurally up on the 4 hour. Keeps fading above 93. So if you're going to trade this, try and trade this to the upside, don't be getting in above 93 because it can't hold above 93. You want to be getting in below 93 on a pullback. If you want to trade to the upside. All right. So we've got the 62 level, the 79 levels down here. Now, is it having a pullback at the moment to find support to continue that 4 hour uptrend that we're seeing? All right. And, if I was going to trade this pair, I'd probably have to focus on the 79% retracement level, again, construct a trade down there because where price is right now, you're going to trade into resistance, 8,300 resistance here. All right, so I don't want to do that. So if I was going to trade to the long side, I'd have to be able to trade where I'm not trading into resistance. So I'm not looking to construct anything in that at the moment, but if you were looking at it, yes, we've got a 4 hour uptrend, but we keep failing at the weekly resistance level. So I'm actually just looking for this to turn over, clearly turn over to the downside, and then can I sell a rally? Okay. I'd like to see the 4 hour structure, which is up at the moment, turn to a down structure. Same on the Aussie yen, but it's not showing you that at the moment. It's showing you an up structure, but it's having a very hard time moving up the chart. New Zealand dollar, it's the same. It's having a hard time moving up the chart. So long-term downtrend on the weekly, it would be great if this could come back up to some of these higher levels of resistance. This is weekly resistance here at 59.21 from this support level there. Could be just, I don't like to sell at such low levels. I'd be a lot happier trading with a trend from a higher level. Doesn't mean said price will give me a higher level. So what I'm seeing is very minor uptrend at the moment on the daily, higher bottom. Lots of shadows on the last two candles. Small spinning tops with shadows either side, so price is moving above the open, below the open, slightly making positive day both days. And that's what we're doing again today. We've been up for the day. We might be going down for the day. Do we finish slightly positive again by the end of the day? It's trading both sides of the opening price. It's not got any clear direction. It'd be great if you just had 2 strong days up to resistance and then failed, but it doesn't seemingly want to do that. 4 hour structure is just holding to up at the moment. Yesterday, after the interest rate decision, we pretty much failed at the 58 level, 58.05. Today, we're fractionally above there, but once more, we failed at 58. So we may find over the next, again to the weekly chart here, we're having 1 week up. Same on the Aussie, 1 week up. maybe all we're having is a week up, and then we're going to have 3 or 4 weeks down. All right, because this pair at the moment, whilst it is structurally up on the 4-hour, does not like to be, will not hold above 58 for too long. So we might see a change in structure over the next few trading days to look to construct trades to the downside. All right, so like the Aussie crosses, it's pulling back to approximately 62. Might find support there. You might be able to construct a trade around here to trade back up to 58. All right, could pull back down to 79. So the 4-hour trends on the Aussie Yen, Aussie dollar, New Zealand Yen and New Zealand dollar are all up. They're pulling back to potentially 62 or 79% retracement levels. They might offer you the opportunity to trade up within that structure. All right, so the dollar Canadian, discussing this monthly big long-term potential pattern. Left shoulder head right is a right shoulder forming in the area we're at. Trend on the monthly is up though, as we're testing this area of monthly resistance and weekly resistance. Monthly resistance is at 137.92, weekly resistance is at 137.15. We're below those levels. Now it could be that all we're having, like we're seeing on the Aussie dollar, which is the inverse look of this pair, is we're just maybe having a week down and then we're just going to continue up. So we may well at least see a retest of the 137.92 level over the course of the next week. Day charts, lower bottom. Now this could come up and put in a lower top up here for a move down. If that's the case, that would then put forward the case that the Aussie dollar is going to move up and the New Zealand dollar is going to move up to their, have a chance to move up to their resistance levels. So from that daily top to this area here, the 62 level overlaps with the 137.15 level. That might be a nice level to trade down from. I'd always pick the high level. The 79% level up here at 137.65 up to 137.92. That would be the level I would watch, whether or not price can get there to offer you an opportunity to trade down. We can see at the 137.92 monthly resistance level, we fell once, twice, 3 times. So why I'm picking up there is if price was to hit that level and you trade at that level, you have a high probability that price will withdraw from that level. You can manage your trade to break even. And then even if you are wrong on the trade, you end up with a break even trade. That's why I always go for the higher levels where I can see that price has been failing at before. All right, now it may only come up to the 137.15 level. You can monitor. All right, but I'll be looking at the higher level. Now on that 4-hour chart, we can see divergence when we formed the top. So maybe it is just coming up to put in a lower top to move down. All right, dollar yen, not trading this pair at the moment. Nothing's much changing. It's just stuck between 144 and 145. Did yesterday move fractionally below 144, but it's just stuck in this area at the moment. So I'm leaving that pair alone, but the 4-hour chart will show you we did get down to 43.52 yesterday, although for most of the time price action is between 144 and 145. So you could trade the confirms of that range if you wanted to. All right, Slav, you're talking to me about gold, 79% fib. I did notice, if I go to my other charts, gold, this range that I've got drawn in here is the candle range of last month. Last month's candles there, we're still inside last month's range. We may not take out the high of last month and simply trade back down. But we're getting support clearly at monthly support 1676, okay? Weekly, we're having a corrective move up, 2 positive weeks back above support. So Slav, that 79% level that you're looking at, is it the same one I'm looking at? All right, yeah, it is, I think. All right, so we're still within the range of last month. This is the high last month. This is the low last month. If price actually starts to move, wants to start to move below the 79 level, well, there's a chance that we're going to come back down and test support. And of course, support could break and we could move below. All right, so you'll often see this price will retrace all the way back up inside last month's candle. Last month's candle's here. This is, if I draw the candle in, there it is. All this price action is just retracing back up inside it. You'll often see this. We just trade within the candle range. We don't take out the higher last month. Look left on the 4-hour picture. Let me get rid of that box now. All these 4-hour tops here, 1, 2, 3, 4, 5 here. We could well start to form the same kind of structure to the right hand side here now. Although maybe we formed a top here, we formed a top here, we're forming a lower top there. Maybe we're on the 4-hour structure now, failing at the 79% rally of the 4-hour downtrend that we were maybe forming here. We have a lower top, higher bottom at the moment, but maybe we're forming a lower top to move to a lower bottom. So you just have to, look for how you want to trade an entry. Maybe we've already failed at 79 of that 4-hour range. It might come back up there today to offer you an opportunity to trade down from that level. You can kind of see a little area of support here. We've broken it. That support was on the 79. We've broken below it. We could come back to that 79 as well. On the smaller structure here, we could come back to 279 levels there. We could come back to this area later in the day. Construct a sell, stop above the high. So limited risk with a nice potential gain to the downside. Okay, so we could be topping out there at the 79% level of last month's range. We may have already topped out today at the 79% level of the 4-hour. And Slav, you're telling me you've shorted at 1724. All right, so you shorted pretty much at the area I'm saying could get retested. Yeah, so you shorted fractionally above that 79 level. So you're fully on board about where you should have been looking earlier in the day. Yeah, I mean, selling here, Slav, of course, you're getting your stop above the high here. This offers you great risk to reward potential to the downside. Risk reward, if you meet the 127 extension down here, constructing your trades like you're doing, that offers you about 4.5 risk reward if my memory serves me right. It's about 3.5 to the low, about 4.5, more like 4.7 to the 127 extension. So it really doesn't matter if you're wrong. If you keep constructing your trades like that, you're going to have wins and you're going to have losses. Even if you're just right 50% of the time, then you're going to be profitable because you're structuring good risk reward. So the more everybody can look at where can I get in with a great risk reward structure, and this for sure is a great risk reward structure. Selling at the 79 of up here, stop above the high, gives you a great risk reward if this wants to trade down towards the 127 extension. All right. And of course, you can be risk-free by now, Slavs, but that's up to you, however you're managing it. All right, so that's gold. So maybe gold's topping out. You know, if the dollar index has, I just want to go back to the dollar index and have a look at where are we within the monthly candle of the dollar index. All right, so it's exactly the same as I had it before. The weekly low up to the weekly high up here. I discussed the 62% retracement level before. That is the range of last month. So we've gotten support at the 62% level of last month's candle. And, you know, if that's going to move up to test this high now, then maybe gold will move down from its 79% retracement of last month's candle. All right, so they're going to work in tandem. If this moves up, gold's going to move down. Olufame, you want me to look at CAD Yen? I'll have a look at that to finish off. If I can find it. Sorry, guys, I can't see it. I'm sure it's staring in the face. There it is. Looks to me like we're failing here. There's a clear area of resistance up here. This is a monthly, all these monthly candles not wanting to move above that high. That's at 106.50. Still in an uptrend on the weekly, but like I was showing you before, the New Zealand Yen weekly chart, MACD divergence. Structure's still up though, high top, you know, up to a higher top. This could be a pullback to want to move through, but you can see that that weekly candle of this week is holding at 106.50. Daily, well, if you break this area here, this is quite firmly to the downside, but at the moment it's hitting 106.50. I mean, that has moved down to a lower area. This could be putting a lower top here now to move down. Structure on the 4-hour chart is negative now. It's just had a 79% retracement to move down from monthly resistance. Okay, that's what it looks like to me. So, you know, that would have been the perfect area to look to trade. 79% fib on the 4-hour at monthly resistance with a pivot. However you want to draw your trend line in, if I get the right tool. You know, looking for an entry through here would have been perfect, and you can see it's moving down. So it looks like it's on its way down from monthly resistance at the moment. All right, Leaf May. Hopefully that's what you were thinking. I don't follow the CAD Yen, but it definitely looks like it's at a very good level on that monthly chart for a failure for a long-term move down, maybe. mean, long term, it's range bound. We've got high here, another high here. And, you know, you can see down here, just drawing it roughly, it's in a very long-term range. Now, of course, we could break through there. Don't forget, we do have, generally speaking, on the yen pairs, some of the yen pairs like the Aussie Yen, New Zealand Yen, and this yen cross, they're all looking negative last month, potentially wanting to move, maybe want to move down this month. All right, but longer term, we still have the carry. You know, interest rates are rising on the left-hand side currencies, and for the Japanese yen, it's not rising. So whilst I'm definitely seeing prices at resistance, negative monthly candles last month, if interest rates keep rising on the left-hand side of the currency, potentially longer term we'll be moving higher, potentially, unless the Bank of Japan is going to come in and, you know, significantly intervene, or, you know, maybe all this interest rate hiking enthusiasm that we're having at the moment, which is quite possibly causing recessions in the UK and the US, and could be causing recessions in Europe. Maybe central banks will pivot totally the opposite way, and the market's already factoring that in, and the yen pairs are topping out ahead of that new news that might come to the market. Who knows? But clearly at the moment, a number of those yen pairs are showing you a very negative month last month. That Canadian yen there is definitely showing you a signal there. Cameron, you're asking me, is the left currency in a pair of the base? I don't know, I get confused. You'd have to Google it. It's just a term. I'm pretty sure it's the left-hand side, but you want to go and Google all that information. Doesn't take much to find it. When I was talking about the interest rate, I was just on the fact that the currency on the left-hand side at the moment, interest rates are rising. The currency on the right-hand side isn't, so that's why the currencies have been moving up. So the base currency is the first currency listed in the pair, okay? All right, and you're still talking to me. You're saying if the left side interest rate goes up, then the pair generally should go up. No, not necessarily. It depends which side's got the interest rate rising. It's got nothing to do with just the left-hand side. It's just the fact that the quote here is Canada to the Japanese yen. Canada as a country is raising their interest rates. Japan isn't. Now, all the pairs that contain the yen are quoted a currency to the yen, and the likes of the Aussie, the euro, the pound, the New Zealand, the Canadian, all those countries are raising their interest rates, and the currencies sit on the left-hand side. So it's not because it sits on the left-hand side that I'm saying it's going to go up. It's just the fact that those currencies are raising their interest rates, and they sit on the left-hand side of the quote on these pairs. So the fact that if the interest rate was rising at a higher rate on the right-hand side currency, then the left-hand side, it will potentially go down. It's whichever currency, it's where the differential is. So at the moment, the interest rates are higher on the Canadian currency than they are on the yen currency. So theoretically, it should move up long term. All right, it's got nothing to do with because it's on the left. If it was quoted Japanese yen to the Canadian, then we would see it quoted inversely. And then potentially we'd be looking for that to move down with the interest rate differential. All right. So Harash is saying whichever interest rate goes down, the currency will go down for Canada, Euro, New Zealand, British pound. I'm not quite sure of your question. or the implications of your question. Not quite sure what you're getting at. So if you can phrase it better, I might be able to understand it and give you an answer. You're saying more interest rate down. Well, it depends what currency you're talking about. Are you talking about, give me a currency pair. Chris, you're asking me about the Aussie dollar New Zealand trend. I can bring it up for you in a moment. All right, for the pairs CAD, Euro, New Zealand against the Yen, even if they cut their interest rates, so let's say the pound cuts its interest rates, we might see a movement down on the pound yen in the short term, but still the interest rate differential between the pound and the yen favors the pound side, because there's no interest rate on the yen side whatsoever. So even if we do see a cut of interest rates to a currency which sits on the left-hand side, we might see some downward side movement, but longer term, we should see that it holds against the yen because the interest rate of the currency on the left-hand side is higher than the right. If we head into a very risk-off environment, not so much, because what happens in those times is the Japanese yen strengthens and pairs to the yen sell off. So it also depends on what environment we're in at the moment. If, for example, the UK government, because of what's been going on at the moment, the Bank of England suddenly comes out and goes, okay, we're really concerned about what's going on. We're going to cut interest rates by 1%. For sure, the pound yen is going to drop. All right. Because of the intervention of the Bank of England. So it all depends what the situation is. Just though, in general terms, if a currency pair, for example, the pound yen, the interest rates of the UK are higher than the interest rates of Japan. So it lends the currency pair to move up because of the interest rate differential. So you're saying, okay, short term may be up, but long term will be down because of the interest rate differential. No, long term will be up because of the interest rate differential, because the pound's got a higher rate than the yen. All right, so just generally with interest rates, whatever the currency pair is, whichever side has the higher interest rate, generally price will be moving in that direction, just as a general rule. Of course, then you've got fundamental shifts that the market might be factoring in as well, but just as a general rule. Slav, you're asking me my opinion about the correlation between gold, pound, and euro. It seems they move quite synchronized in the last few weeks. If so, which of them do you prefer to trade? If I had a choice, I don't trade gold, so I wouldn't trade gold, but the pound is the most volatile. The euro, I would say, is the more offers you less risk in terms of the volatility price movement. So let me go back to the charts. The pound dollar still moving down, so it looks like it may have topped out. Might not be getting up to the high level I would like to see. Now we had like 1,000 pips run down here. If we move down on the pound dollar back down to support, there's 800 pips. So this potentially offers the best reward if we move back down to support. However, it's the most volatile. Whereas the euro is a bit more stable. Its price movement is not as volatile. If we move back down to where we came from at the moment, there's only 350 pips. So there's a lot more potential movement that could occur on the pound dollar than the euro dollar. However, hopefully we all can be aware of what's happening with the Bank of England, and then the government from the UK keep coming out. There's a lot more volatility on the pound. to contend with. All right. With gold, I don't know too much about gold because I don't trade it, but I would think maybe the fact that we false broken support, maybe support's going to come in on gold. Gold might just go sideways, sticking on support. I don't know if gold can collapse below support. Whilst we might be seeing the pound and the euro collapsing, I don't know whether the gold will collapse as much because it looks as a safe haven kind of instrument. So I think the potential for stronger price movements is the pound dollar, more stable euro dollar. I'm not really sure about gold. Hopefully that helps you. But the pound dollar and the euro dollar at the moment are very much highly synced together, aren't they? It's just that the pound dollar is much more volatile and showing larger ranges. So potentially that offers you more reward. But with the volatility, there's that risk factor. You could get whipped and stopped out a lot more easily on the pound dollar. Because I was in the same thought process earlier in the week, thinking about either trading the pound dollar, whereas the pound dollar, let's go to the 4-hour chart. I was looking for potentially trading at 114.09 because of the potential for more gain. But I was thinking there's definitely the more potential for volatility and getting stopped out. So I elected to trade the euro dollar. So I am making money on the euro dollar, but I'll be making more money on the pound dollar if I took that trade. All right, Chris, Aussie New Zealand. It's going to go. Slavia asked me, have I entered any trades today on the pairs you were watching? No, because they haven't got to my levels. I was looking for higher levels. I'm already in the euro dollar at the level that I'm watching for price to get to. I may have entertained an entry on the pound if it got up to 114.09, but it doesn't look like it's getting there. So I'm just sitting on my hands at the moment, waiting for price to get to a level that I like. Like I was saying on the Euro Yen, which is kind of getting resistance now at the central pivot. You know, I'd like to trade this pair if it can get up to 144. But I don't know if you can get there. So I'm just waiting for levels that I like at the moment. All right, Chris, you want me to look at, and I'm very cognizant of the fact that we've got the job figures coming out tomorrow. So I'm not trying to be in too many pairs in case the job figures tomorrow is negative. I'm already short the euro dollar, but I mean, that might spike back up if the US dollar news is negative tomorrow. So I'm not trying to overload the boat at the moment. Aussie New Zealand. Trend, well, the trend on the high time frames is up. We've pulled back to weekly support and potentially moving higher up. The interest rate differential on the Aussie New Zealand, even though the Aussie New Zealand is moving up, the interest rate differential favors the New Zealand side. So whilst potentially that correlation should be more to the downside, Aussie New Zealand's moving up. That's probably more to do with the fact that even though in New Zealand they're raising interest rates more aggressively than Australia, the market may well be looking at the fact though that whilst they're raising interest rates more aggressively, their economy may well, you know, move more to the negative more quicker than what the Australian economy may as the interest rates rise. But ultimately, the monthly trend is up here. It is just at a key level of monthly resistance here that it may be holding at. And you can see long term here, it's very, I don't trade it. It's very consolidatory in terms of its long-term picture. And it could, you know, be holding there. The exact numbers at 114.42. So Now that I've got my level of resistance in, things are a little bit more clearer. I was looking at this maybe of hitting weekly support here to move up. But now that I've got my resistance in, I can see that the last 2 weeks have held at 114.42. So we could be at a point where we're going to start to trade down. Day structure's down. So I would be thinking that, what has happened this week is we were expecting 50 base points on the Aussie. We only got 25, but we got 50 on the New Zealand. So the interest rate differential is increasing to the New Zealand side. The day chart trend here is moving to the downside, and we could just be simply looking for a further lower top to form on a fib retracement, to move down. If we can't break above 114.42, you'd have to start to think that we're topping out. All right. So if we break above 114.42, things are back on the side of the Aussie New Zealand moving up. Whilst we're holding and filling at 114.42, it favors a move down. Okay, hopefully that helps. All right, last one, Fresky. You want to look at the EURCAD? All right, so we've hit support on the monthly chart. Monthly trend is still down, but we've hit support. Weekly trend is now up. Last week would have been the time to be a buyer on this pair when it came down to hit support on that retest. This is looking quite bullish from that weekly perspective at the moment. That support, there's a 79% fib retracement there. That would have been the area to look for your trade. Now you should be looking for a retracement within this fib range. Potential retracement for the next move up. All right, looks like you've hit monthly support there. Weekly trends turned up. Looking to try to trade to the upside if the day chart can pull back to put in a higher bottom again. All right, hopefully that helps you, Fresky. Just going to read your last comment, Slav. So you're saying it seems that nobody cares about the job figures unless something out of the ordinary comes. Well, let's say we get a disastrous job figures on Friday because of the potential of a recession that's hitting the US and the high interest rates that have been coming in. Then, we could see a bit more US dollar selling. But at the moment, when we just look at the dollar index, it's just keeps having like 1 week down, 2 weeks down, and then trade straight back up. So until we see something potentially at some point in time, it doesn't mean to say it's going to be anytime soon. On the dollar index, structurally, it's just weekly trend up, monthly trend up. Nothing's changing. So until we see maybe from the US something fundamental that, because they've just said, the FOMC saying we're going to keep raising interest rates till inflation is curbed. All right, that's just going to drive the US dollar to strength unless something fundamentally changes. So I just feel like until we get a fundamental shift, this will just keep having a retracement, corrective measure, because price moves up, people in profit, they sell to get out, we get a retracement, people buy positions on the retracement, and we move back up. So until we see something fundamentally shift, then at the moment, it's just full steam ahead for the US dollar. All right. So yeah, even if the job figures is slightly poorer, maybe it's not going to make a big effect. If we get a very different figure, a very negative figure, way beyond slightly negative, then, you know, it could impact the market. But in all probability, you know, like the pound dollar, euro dollar, they've probably topped out already. And we may well just get, you know, a normal news release for the jobs, which is generally just US dollar supportive. And we may just, you know, be moving down on the pairs to the US dollar. US dollar continues to move up. All right. All right. Last couple of questions and I'm going to go. All right. You're just confirming my thoughts. Cameron. What about indices? Is there enough volatility and liquidity trade the Japanese or Australian indices during the Tokyo session? Well, those are the main sessions for those indices, so yes. You're asking me about the UK 100 in London. Well, that's the main session in London, so yes. And German 30 in London, yes. Those are the main sessions for those instruments. You've always been told to trade the US 30 and the NAS during the New York Open, but I'm asleep. Well, the main sessions for the US 30, the S&P 500 and the NAS is going to be the New York session because that's their stock market session. So for any indices, ideally, the window to trade them, the best time is when those stock markets are trading, because the underlying index is the correlated calculation of all those stocks added together and given an average. So those stocks are trading in those countries' sessions. So that's where the liquidity is. You can trade the S&P 500, the US 30 and the NAS outside. As long as you're seeing clear price structure, you can clear them outside. You can trade them outside of those main sessions. Just do some work on them. You can trade them. All right. All right, everybody. Thanks very much for all the questions. Next week. We have live market analysis on Tuesday coming up, 8 p.m. Sydney time. Where are we? So Tuesday the 11th, live market analysis. Next Wednesday, I'm going to go through market liquidity, introduction to smart money concepts. I'm going to look at market liquidity, how I look at it. All right. If you're fully across like smart money concepts, I might not deliver it exactly like somebody else that you may have watched on YouTube. All right. So I'm not going to get too religious about smart money concepts. Some of these people that you might go and watch on YouTube that do provide very good information on the likes of liquidity, order blocks, price imbalances. I'm going to cover those over the next 3 weeks, how I look at them. Somebody on YouTube who might trade them as the only tool that they trade may well go in the, through that in much more detail and in slightly different way of doing it than I'm going to show you. Okay. I'm taking it much more from a perspective of looking at other ways of how people look at the market so that you have a much more rounded approach of how other people are looking at the market, because what you don't understand can be risk to you and loss to you. But if you have a much more rounded approach of how other people are looking at the market, that might help you with the way that you're trading the market. All right. So I don't necessarily just trade the market just based around what we call smart money concepts. I'm aware of the concepts. I can see them on the charts. I don't necessarily enter my trade because of the smart money concept just alone. But I'm going to give you a broad kind of understanding of those concepts so that you can add it to your arsenal. Okay. So market liquidity this Wednesday or next Wednesday coming, and then more live market analysis on Thursday. Okay. So that's what's coming up. If you want to join me, just head over and register. Other than that, thanks very much for attending this evening. Have a great weekend. Hopefully safe trading through the US job figures tomorrow, and look forward to seeing you next time. Okay. Thanks, everybody.